All right, everybody. We are back. We are back with a very distinguished global group led by Simon Lehman, president of AJL Atelier. And I'll let Simon introduce the group and the topic, but I just want to thank everyone for coming back and thank you for jumping in the networking. And Simon, lead us into the future of efficiency through flexible rentals.
Thank you, Steve. And I'm trying to do a better timekeeper today than I did last night. And it's great to be here once again on Flex today. So I have an incredible panel today to talk about cost savings by technology adoption into our operation, which is extremely important in our business today for several reasons. So first of all, let me allow to introduce quickly my panel that I have today. So I have Steve Davis, the new CEO of Operto from Vancouver, Canada. Great to have you, Steve. Then we have Mike Burton from Jetstream in the UK, and then last but definitely not least, Jeremy Gall from Breezeway, based in Boston. Simon Lehman, based in Switzerland. Snowy weather outside. Christmas is on the doorstep. So it's great to have you today, and we have a really amazing topic, and I was fortunate enough to listen to quite a few panels previously as well, and obviously competition, reinventing the wheel. I don't think we want to cover the history of master lease and everything else that happened in multifamily. In this conversation, I think we want to look forward, right? This is what we're all about. We're waiting for the vaccine, and we're waiting for the uptake of the industry. But we all know the competitive space is still there. We're going to compete with hotels very soon as well, which we need to consider as well. Margin compression was a big topic on my panel yesterday with new models of rev share models in the multifamily space. But before we do that, we also have an IPO looming that is actually quite important to our industry as well. Maybe it was more important in the past, maybe less important in the future, because people realize, sort of putting your eggs into different baskets might help to mitigate and reduce your overall risk. But we have heard on tokenized valuation, IPOs of Airbnbs already valued at $76. Jeremy, what is the IPO going for in your view? Number one, what's the valuation of Airbnb, and are you going to buy shares?
I think that's about it. I'll leave it for the bankers to set the valuation when that happens in the next couple of days. I think that's about on target. I think the more interesting question is, where does this land at the end of 2021? And, do you think Airbnb is going to be up 20% by the end of 2021? And that's going to, in my opinion, depend on how this valuation shakes out at the last minute. But I think so. I think, this industry looks good and it looks robust, and I'm a buyer. I'm not going to have my hands on.
You're a buyer. Thank you for answering one question. The rest I'll take on. So that's perfectly fine, Jeremy. I'll take you on that one, and we will figure out the rest later on, as you put it. Obviously for all of us. What about you, Mike?
Yeah, well, I think it's going to market at what, 45 billion at the minimums, which is great for the guys that invested at circa 20 billion valuation in the midst of COVID. So they got a good return. I'm a buyer. I think it's interesting to see what's happened even with DoorDash today. I mean, things are just crazy in the market, but I think it definitely hails a new chapter, and I think it highlights a lot of tailwinds that we're definitely seeing. Though the market sector that traditionally would have gone to hotels first, actually now seriously looking at, short-term rentals, vacation rentals, etc., especially with a new, larger, I think, number of people working from home, studying from home, the ability for them to be able to travel and at the same time work and study is really opening up the market for Airbnb. So I think it's great for the industry. It's great for all the staff and the stakeholders in Airbnb. And it's a big success story for the space. Excellent. So yeah, I'm bullish and I'll buy.
Excellent. Thanks, Steve. Thanks, Mike. A second buyer. Steve is shaking his head. Tell us, Steve.
You know what? I've been involved in a lot of these IPOs and Facebook, and as they come out. I'd say that I'm a buyer, but for different reasons. I think, you know, where we're sitting right now is there's so much pent up demand, and everyone is clawing at the windows in their houses, just waiting to go on vacation, just waiting to, you know, get in a plane and get back to normal. And as such, I think that, you know, I've talked to other people in the industry, whether it's in the wedding industry, anyone who's sort of touches our industry, and there is so much excitement, so much pent up, just like get me out of here, that I think that it's going to rocket. I really think next year is going to be a huge year. I think, you know, as long as the stock market doesn't tank out, I think it's going to be a big year. So, you know, I'd probably jump in. There's definitely some more upward movement, I think, on that valuation.
Well, thank you guys for sharing your views on that. Obviously, we'll see what the market dictates in terms of valuation, everything else. And I think I can only support you on that. And we share that optimism with you, Steve, and everybody else as well. And I think the vertical has shown that we can do that. But this particular vertical we're now involved with multifamily and flex is obviously quite a different vertical. And our topic today is talking about technology adoption, mostly by giving space to companies like Airbnb, taking over 50% of the margin in terms of distribution, and then leaving the rest of the margin with the operators. And technology plays a massive role in sort of helping to reduce costs and improve margins. So one question I want to throw out to you all, and I want to start with Steve Davis on that one, is what is it more? Is it more protecting margin compression, or is it more providing a better guest experience when it comes to tech adoption?
Yeah, it's an interesting combination of both. I think on the margin compression side, I mean, the reality is that we know for a fact with a lot of our customers that they're seeing operational efficiencies and they're saving money through technology for sure. So whether that's temperature setbacks in their houses, whether it's basically lowering the friction points of entry and exit and check-in, check-out, cleaning services, et cetera. So we are seeing huge savings on that side. And then on the guest experience side, I mean, we've talked about this before. The technology is just table stakes now. If you don't have a seamless, frictionless environment for your travelers to come in and leave and sort of have a bespoke experience that they want, which technology can provide, then I think you're going to get left in the dust. So I think it's a mixture of both.
Yeah, absolutely, Steve. What about you, Jeremy? What comes first for you? Is it a guest experience, or is it providing a cost-saving component to your customers?
Yeah, I mean, obviously it's nuanced. I'm going to go consumer experience first, because I just don't think you can afford to. Technology influences that, enables that, but it's all table stakes these days. Like, I think bespoke, that's a great word. We all know, though, that so much of this industry still needs to get to like baseline quality before they even can get to bespoke. And it's really that focus on the consumer experience. I think first, tech savings, it's got to happen, especially because of margin compression. So you got to save on the margin, but you can't skimp on the service, or else you're out.
Yeah, absolutely. While we're still trying to address at least 60% of the market that has not rented yet. So we need to build a better product regardless of that. Moving on to Mike. Where is the understanding of fixed and variable costs, Mike, and what role does that play in that game? Can you give us a view on how you look at that with your product with Jetstream?
Yes, I mean, from our perspective, the guest experience always drives everything else. So if you come up with the right guest journey, touchless, preemptive, and efficient, and your good repeat business, good returns, good referrals, etc. So I think the more that we can do that, the more you're going to get better revenue in the future, and therefore your costs, operating costs are going to come down. We focus a lot on on just overall process efficiency. And that's why we love sort of partnering and collaborating with other best-in-class platforms in the space. There's no doubt there's a huge amount of fixed cost out there. And we see that every day on the news or whatever, when you look at hotels and their traditional legacy, cost structures with very high fixed costs. And there's no doubt that technology and the data around being able to schedule, being able to provide touchless experience, which is obviously what guests want. The hospitality journey is all moving now towards touchless. So I think the combination of maintaining, using tech to deliver that can actually win on both areas. Yeah, and definitely drive and convert your fixed costs down to a variable cost.
So when we talk about cost, and thank you, Mike, I think we all agree on that. When I was preparing for this conversation today, I was thinking something is broken here, because when we look back to Master Lease, all of these extremely well-funded companies like Lyrics, Dale Alfred, Domio, Nido, no matter who you talk to and wanted to introduce technology, they said, stay out of my door, we do it end-to-end ourselves, right? So, and now all of them have disappeared, or pretty much all of them have disappeared for all obvious reasons, and we don't want to dwell on that. We have heard plenty of the discussion on Flex during the last couple of days on that, so we don't need to dwell on that. But my question is something broken in the approach? Because if I have common sense as an operator, I can distinguish between variable and fixed costs, number one. I distinguish between where can I differentiate myself and where I can't differentiate myself. And trust me, I had endless conversations with tech developers and founders who said, we don't need anybody. We produce everything end to end, raise millions. All these millions have been flushed down the toilet with absolutely zero execution valuation whatsoever. And now we're trying to reinvent it again. So we all understood, okay, maybe master lease commitments might be not the right way to go. Maybe we need to do a rev share commitment. Okay, so we already come into partnership. Also, real estate owners have realized this might be a too risky game for higher margins. We always thought it's the raising interest rates that's going to break their back, not a pandemic. We didn't have that on the radar, but it's broken their back regardless. Interest rates could have gone up to 5%. They would have been broken too. Now it's been competitive. They're bidding themselves totally out of the market to get access to these properties, but they still said, we want to own tech end to end. And Steve, I really want to throw that one at you first.
Totally.
And give us a go at that, please.
You know what, Simon? I think we are a tech-forward, software-driven company, and who does deal, with a lot of hardware complexity. And the amount of the differences between the North American market, the European market, Australia, Asia, Africa, they all have their nuanced challenges. And so to be able to make a blanket statement like we do it end to end is very close to just a bold-faced lie, because it is very, very difficult to be able to deliver that from anything we've seen so far. And that's sort of where we're going, is we're trying to bridge that gap. But yeah, it's a challenge right now. And I think, there's no doubt that, when we build stuff for software, we talk about SaaS. We always talk about simplicity as a service, right? Like, how do we make it simple, easy for not only the guest, but also the owner, and also the ancillary services, and make software simple and enjoyable and relevant. And that is a huge challenge, but we're getting there. And I'm sure that the other panelists on this call are of the same mindset, that it's not software for software's sake, but it's very much about, how do we make this work and make it work for as many people as possible, and just keep iterating and getting better at it.
Jeremy, as Breezeway provides a very important component of all this in terms of value proposition across the value chain, what is the future model when it comes to tech in the multifamily space? Let's consider everybody has learned that master lease might not be the right answer, so we'll go with rev share, and short-term rental will come back without a doubt. it will compete with hotel space. But where does it end up in terms of the tech adoption, and where do you see Breezeway or this piece of technology play a role? And is it all in-house, or is that going to be different?
Yeah, a couple of quick points on that. And it's not, this is Breezeway agnostic, right? It's like, I think what everybody wants to accomplish is asset light, experience heavy. And if that's what you want to do, you need technology to do that. And I think it's plain that simple. And when it comes to multifamily and what we've seen with a lot of these operators, we don't need to redwell on that. Maybe it was over exuberance. But I think these operators look very much like the hospitality providers in the way hotels and hotel chains have been approaching this for 30 years. They don't build their own tools. They think to themselves, what are the best tools that we need to accomplish this mission? And then the only real question remains, am I going to build my own middleware, or am I going to have to figure that part out? And I think what we're going to see is all these operators, that's the question they should be asking. Do I need to build middleware to take best in breed tools and pull them together in a way that's really unique to me, where I can drive unique value to my customers? Or is that not my game and I'm not going to do that? And after that, go buy technology and be a hospitality company.
One thing I love about you, Jeremy, is your subtleness to tell the entire industry they're totally stupid to actually do that on their own. This is crazy, but this is great. I mean, Marriott didn't develop their own locking system either, and cleaning software or operating software at their hotels. I think they didn't do that either. So thank you, Jeremy. That's a super strong statement in a subtle East Coast Boston way. So now I want to move this on to Mike, and let's get a bit deeper into these examples, especially what Jetstream does in taking over sales processes on behalf of others. Can you maybe share some examples in terms of how could these people actually go against this insources versus outsourcing? Obviously, variable versus fixed costs, we all understand that. That's first argument. What would be second argument to actually do the opposite on what we just discussed?
Yeah, thanks, Simon, and thanks for Stephen and Jeremy, because you guys have really highlighted that, from our perspective, we like to understand the boundaries of the problem we're trying to solve. And that's what we've been focused on, really, I guess, proving and resolving over the last number of years. Now, there's so many amazing specialized platforms with people that really know that vertical, whether that's Breezeway in the cleaning and maintenance, or Ruperto in the monitoring and the keyless. So for us, it's about creating this framework centrally that can basically collaborate and connect seamlessly in a two-way manner with all these best-in-class providers around us. So yeah, I'm an engineer, and so many people that get in this sector, they love building tech, and we've loved building tech. But sooner or later, you have to say, well, is the tech that we want to build, is that already built, and has it been built by somebody that knows that particular vertical? Further down the line in terms of level of functionality and experience for the guest. And at the end of the day, we all know the basic data that floats around our industry. It's the booking data, it's the guest data, it's the communication data. Once you can create the open APIs to basically impart that information out and then take the information back in, and you've got aggregated communications and automated levels of, feedback going backwards and forwards to the guest in an automated manner, then everything becomes way more cost effective and seamless. And we can get involved in maximizing that overall arching experience with all our collaborative partners, rather than just trying to build out technology which overlaps our partners, which we don't need to do.
Steve, where does the ownership start and where does it end in terms of that? I mean, now, while we're seeing these big boys going away, having invested a lot in their tech, we see a reshift. We probably see investors and homeowners are actually starting to build their own SDR products, but they need operators. who is going to invest in tech going forward? Is it the operator or is it the homeowner or the property owner?
I don't see. I think it's a bit of a mix of both. I think that the homeowner's there's probably gonna be a demand for it, and to make that investment in technology is just like such a no-brainer at this point. I think it's really important for owners to realize that there are some incredibly strong service providers out there, regardless of what you're trying to accomplish through technology, that have got the chops, who've been building technology, who've been reducing friction, who have been thinking about the challenges that we now face years ago, and have been building and building and building. So to reinvent the wheel at this point doesn't really make a lot of sense. And I think that the costs are low enough to get into the market on the hardware side and the software side, that I think you're going to see a mix of both. It's going to be a push-pull relationship. But the one thing we do know for sure is that technology is going to drive the next wave of sort of where the industry is going. And as I said to you, I think last week, is like we're sort of like surfers out on the wave, and we've been waiting for this wave, and here comes the wave, and that's the technology wave. And so for owners, I think it's really important for them to do their research, figure out who's out there, and then figure out what kind of guest experience they want to deliver, and then adopt the technology accordingly.
Jeremy, with the reshape, thank you, Steve. With the reshape of the industry and catching up on what just Steve said, and one of the statements I made about a year and a half ago, saying operators will become glorified cleaning companies. Is that going to happen now? So the question to you, Jeremy, is, do we see that shift in value proposition, which means actually multifamily owners take more on in terms of that value proposition, so taking it more in-house, and then at the end of the day, they need somebody to hand over the key and clean the place, and the rest the actual multifamily homeowners will take care of? And is that the shift where technology is going to go in your view as well, or where is that going to go?
Yeah, I agree with that view, and I think aligned with how Steve is thinking about this as well. I might add my 2 cents to that, which is that multifamily building owners, they need to be in the business. I mean, this is the Flex conference, right? The whole point is that hospitality living, long-term, short-term, it's converging, and it's so flexible that those operators need to be thinking about, how do I put technology in these buildings? The owners, how do I put technology in these buildings that enable that hospitality experience for my long-term residents and my short-term guests? And it's the same technology. Your long-term residents want the same easy access electronic locks. They want the same capabilities. They want the same service. They want you to come in and say, hey, look, there's bundled services and amenities with the buildings. We've seen this with the amenity wars. So I don't think it's one or the other. And I think it's like the owners are going to jump in and say, that's right, we need this technology for our residents. Just so happens that technology investment really helps us then be able to find the right partners to deliver the cleaning and deliver the short-term experience to guests as they come into our buildings as well.
Wow, that's amazing. And I know we have only a couple of minutes left because Steve is just telling me about to come back in the call and point myself to the watch. But this is incredible, Jeremy. This is literally incredible, and I totally agree with you to think about that, because the way we live, the way we consume, everything else is starting to converge entirely, so that technology has actually far more way of being adopted than just in our sector alone. But I think that's where it needs to shift more to the actual asset owner than the actual operator, because that's the person who owns the value proposition at the end of the day. Now, Mike, you have the closing word in this panel, because Steve is already coming back on our conversation, saying, Simon, you need to wrap this up. How does that? So I'm giving you a final question, Mike. Is in terms of distribution, obviously that's your sweet spot. That's what Jetstream and Leaftown is is all about, providing distribution to these operators. Where does it for you? Are you pitching now more the operators, or are you more pitching the actual owners like the Grey Stars of the world to say, hey, this is what you need to offer flexible living and flexible renting as well?
Yeah, well, I think there's never been a better time for operators, owners, institutional investment companies to move their inventory to more of a flex status, as you say. So it's not short-term furnished, it's not long-term unfurnished. It can actually be a blend of both. And at the end of the day, we are specialized in operating and distributing and working with best-in-class full suite of services, which enables the owner, the investor, to go out there, research, and actually find the inventory that works for them, that fits the niche in that geographical area that they're in. So I think that, and there's more and more, I guess, non-operators that are understanding that their skill sets is finding the inventory and partnering with us on a share success revenue share basis, where we bring in all the best in class into one cohesive overall solution, and they can just get on and do what they do best, which is basically finding properties to make sure that they're getting the best yields that they can by partnering with us.
Gentlemen, Tech All-in-One is over. We have a shift in value proposition when it comes to owners and operators. Thank you so much for all of you for taking part of this amazing panel. Steve and Dennis never give me enough time to have a conversation with my panelists. We tried to make the most of it. It was a great pleasure to have you on this panel today, and I thank you very, very much for your participation.
It was a great story. Thank you. And
Great.
Thanks, guys.
just to be fair to us, Simon, if we gave you enough time, it would be 2 hours because you can draw so much out of your group. So we just have to make do with what we can get. So thank you very much for pulling this together.